Okay, I thought I'd try to um, voice over some of this price action here. This is the second trade of the day, Monday, um, March 24th. I already had a nice winner this morning on market, New York Stock Exchange open, and was going to try to document and explain a little bit about the entry model. I'll link to Matt, Matt's, well, all his socials and all that stuff, but it's his entry model. It's his forever model, I guess. And I guess I'll just kind of try to explain a little bit about it here. But of course, might as well just go to the source and get the actual model itself. But anyway, from my understanding, um, we're bullish on the day. And this was my higher time frame. This box right here, this was my higher time frame point of interest earlier today. As you can see, I had already used it. In my mind, if we haven't gone back into it or revisited it or broken through it, then we're just going to be bullish. So that's why I have my bias is bullish. So that's step one. Step two is on a 5-minute chart here. I'm looking for sweeps. So if I'm bullish, I'm looking for longs. I want to sweep to the downside. And then, so we got one here, right here, which kind of looks a little innocuous, but it's there. There's another one right here, very close, but it is right there. And actually, what this one did, that's not SMT, that's the sweep. What this one did was actually created the low for this particular SMT instance right here between ES on the right, which had a lower low versus a higher low on NQ. So therefore, I'm bullish on NQ, and that's what I want to trade. It's the stronger asset. That's the idea. Anyway, so got step one was the sweep. Step two is I've got SMT. And then the third step is basically a close above the order block, which is the down candle that was created the sweep, which is right here, this candle right here. We want to close above that. And once we get a close above that, then we set a limit order at the high of that candle, or the open price of that candle, excuse me, not the high, the open price of that candle. And you can see it came back on this candle, came back, tagged me in, had a little drawdown back into this inverse fair value gap. And it's been bullish ever since. So I am looking at the standard deviation levels. So on ES, there's a 2 standard deviation 2 right here, which is a potential stopping point, if you will, on ES, and could affect NQ, of course. And there's also a fair value gap unmitigated that we're breaking into right now. So while I do have a 2R set up, probably going to just be looking towards this buy side liquidity at the high here. Otherwise, it's pretty aggressive. There's, hasn't been total push up since the market opened. It's basically been since Asia, or the market opened since overnight. It's just been slow grind up. So I'm not expecting, a huge, massive push up. I'm actually expecting a push down because there's also this big new weekly open gap here, down here, that still needs to get addressed. So I am expecting price to come back down at some point. So probably going to cut this one short, of course, and just let add another $100 to the day's profits to see how close we can get to this buy side liquidity. And the best case scenario is we get a massive push up real quick and spike up to the second deviation up here on NQ. But you never know. Looks like we're putting in potentially a new SMT on for cells for NQ. So Definitely going to be watching out for that. We'll see what happens. Anyway, let's let this video play out and probably close out here really soon. All right, I'm just going to move stops to break even. Because if we don't just continue to rally, then I'm really not interested in staying in this trade, to be honest with you. So I'm just too concerned about it reversing, sweeping highs, and then just immediately reversing, and or not, just reversing now. We've got internal liquidity taken here at relative equal highs. So it's very possible it could just reverse right now. All right, I'm going to de-risk a little bit here. So I'm going to go 1 to 1.5 instead of 1 to 2. Even though we could make it up to the 2 standard deviation level, but so essentially what I'm looking at here is a excuse me, a lower high on ES and a higher high somewhere on NQ for then ES for the reversal. That's my expectation. The thing is, I don't know where this is going to happen. So it could be up at the standard, the 2 standard deviation. It could be at the just above liquidity. I don't know. So let's leave that right here, and we'll see what happens.